My name is Altamash Sayed, owner of a financial services firm, a teacher of finance, and someone who's curious about frontier economies. Join me in my journey as I deep dive into Pakistan's financial markets. Together, we will learn how to capitalize on the opportunities and navigate the risks that are present. We will hear commentary, opinions, and analysis from the leading voices and experts in this domain. Our end goal? To become knowledgeable and confident investors. So let's go. Our guest today, Rabeel Warraich, is the founder and CEO of Sarmayacar, the first institutionalized venture capital firm dedicated to Pakistan. He currently serves on the boards of Baiki, The Y, ProCheck, and Batari. He is also involved with various government and private sector initiatives promoting entrepreneurship and venture capital investment in Pakistan. Prior to his return to Pakistan in 2018, Rabeel spent a decade in London, working as a private equity investor at GIC, Singapore's sovereign wealth fund, after starting his career as an investment banker with Morgan Stanley. Across these roles, Rabeel invested several billion US dollars in direct equity financing, ranging from early stage venture to late stage buyouts. Rabeel graduated from the Massachusetts Institute of Technology with 2 Bachelor of Science degrees in economics and management science. At MIT, Rabeel was president of the International Students Association for 2 years. Rabeel is a trustee of Squeaks Foundation, which sponsors higher education for female students in Pakistan. Our conversation today will focus on learning about the venture capital space in Pakistan, understanding which sectors in the economy are ripe for disruption, and how investors can participate in the growth of the digital economy. Tons of insights to share. Can't wait to bring them to you. Let's go. Rabeel, welcome to our show. Listen, I am excited, as I'm sure a lot of our viewers will be as well, and we're eagerly looking forward to today's discussion on how investors can capitalize on the innovation happening in Pakistan's economy. And so I was hoping if you'd like to just get started and perhaps let our viewers know about Sarmayacar, and then if you can as well, we'd be grateful if you can provide to us an overview of the venture capital space in Pakistan.
Thank you, Altamash, for having me on your show. I'll start by just briefly mentioning what Sarmayacar is, which is a dedicated venture capital fund for Pakistan. We like to believe that we are the largest and perhaps the most active investor in early stage Series C, Series A stages of startups in Pakistan. And this is part of an overall ecosystem that we describe as a venture ecosystem in the country, and which has various different stakeholders that are not too dissimilar to other ecosystems that you would have encountered. Of course, most of them being further advanced compared to the Pakistani one. However, where we find ourselves is there is recognition by the government and some of the agencies around that the sector needs to be enabled. It's an avenue for the youth of the country to find employment, to generate wealth, to capitalize on opportunities and solve what have been long-standing issues in the country, together with a very attractive opportunity for investors that are ready to take on the risk that comes with this asset class to generate the kind of returns which are not available in many other parts of the world. And the idea of setting up Sarmayacar was effectively to bring this notion of professional venture capital to Pakistan and be a bridge builder between Pakistan, its talent and the opportunity, and investors and other domain experts in other ecosystems that could either add value to Pakistan or potentially contribute capital to the country so that the ecosystem can advance as a whole.
That's excellent. Thank you for setting that stage, and it'll help us with our future discussion as well. When I think of the term, Rabeel, venture capital, I also think of the terms innovation and disruption. And we all like a good story. And so perhaps I'll ask you to share with us a major example where innovation has disrupted consumer behavior in Pakistan?
Sure, that's an excellent question, and oftentimes when as VCs we're analyzing opportunities, we're talking about consumer behavior. So there's this great belief that the underpinning of attractive return opportunities is consumer adoption, particularly in emerging ecosystems like Pakistan. One thing that I want to make clear at the beginning is that we see a slight difference between how innovation might be defined in its strict sense in Silicon Valley versus what might be an innovative solution for a problem in Pakistan. That innovative solution for Pakistan might not necessarily be a novel idea in the world, but in terms of its applicability and the business model market fit for Pakistan, it might be new. So we would still consider that to be an innovative opportunity. And so in my response, I just wanted to kind of make that clear at the beginning that we're not expecting global breakthroughs to come out of Pakistan all of a sudden. We are not set up like that. We're not equipped for that. Inshallah, the hope is we will be in the future. But for now, the focus is on the 220 million people that are already existing here, that eat, that consume, that do everyday things, which are now being moved to a digital consumption pattern. And that's really the key underpinning, the $250 billion market, which is consumption oriented. That is moving to a digital experience, an online ordering kind of platform, which is basically being driven by a penetration of smartphones and lowering of data costs, which is bringing people onto the mobiles. And we are now an overall mobile first economy. So that's the overall mega trend, if I may put it that way. In terms of specific situations or opportunities, an example that I can share in a sector which is quite hot in Pakistan right now, which is B2B digitization, retail digitization. So normally what you would have is across the country, you have 600, 700,000 of these Kirana stores, which are these corner shops that you go buy milk, biscuits, etc. from. Typically, these corner shops rely on a distributor network, which again comes to them, they take orders, they will bring 15 packs of chips, 10 liters of Coke, etc., etc. What is happening now is like some startups have emerged that would directly connect those retailers to the manufacturers, so FMCG suppliers, so that ordering can take place directly. Effectively, this is not relying on a change in consumer behavior. All it's doing is it's trying to remove the inefficiency in that distribution network, in being able to reach certain areas, in the setup or the market being slightly broken in that these distributors not being correctly incentivized and instead going to these big markets to dump all of their stock. So this change is happening quite rapidly, but off a very, very low base. And in a few years' time, we would expect that a lot of these, if not most of these vendors or retailers order directly from FMCG players. And a bunch of startups or companies coming in the middle that fulfill, that might be payment processors, that might just be the connectors between the manufacturers and the end retailers. And similar business models, for example, have worked in other places. In India, Oran is the market leader. In Egypt, Maxab is a similar kind of company, and Pakistan has seen 3-4 of these companies emerge just in the last few months. So that, to us, it represents exactly the kind of sectors that we expect to go through digitization, which will create opportunities to capture market share, disrupt maybe some of the traditional players in those sectors, and as a result, get more and more wallet share from consumers. Maybe one final example I can give is like banks, for example. Banking in Pakistan still is in a different century, it feels like. Even for businesses to pay out their employees, you have to go through traditional checks. There's a lot of paper that moves. However, we've seen emergence of digital payment vendors, the payment gateways, etc., wallets, and a lot of these are emerging in the country. However, no one has the scale yet to really be a full-fledged offering that can speak for a large chunk of the volume or the market transactions, nor is there a full stack digital bank. All of these are very difficult to build and also require regulation to be supportive, require, again, funding to be in place, et cetera, et cetera. So when we look at how much disruption is possible in that space, it becomes a function of many different factors rather than just a startup team's ability to go out there and move mountains. For example, there's new regulation around electronic money institutions that only came out earlier this year. And as a result of which, we do now expect there to be more licenses given out, more companies and startups trying to have some sort of payment offering, some sort of fintech offering that tries to capture market share and bring consumers on board. However, we are not there yet. And as they say, sometimes refer to banks as dinosaurs, and maybe I might also add telcos to the same mix. I think they are going to face increasingly more competition from startups, but as an ecosystem, we're not there yet that we can speak of an entirely digital bank offering to be replaceable easily with the conventional banking options that we have.
Those are some fun examples, Rabeel. Thank you for that, and ones that I think most of us listening to this would be able to relate to. And thank you for making that distinction between innovation in its true sense versus innovative solutions in Pakistan customized to that economy. And so that really set the stage for the examples that you provided. So again, thank you. Now, I think it's fair to say that innovation is not restricted to the private sector. And in fact, I think there have been cases of public policy initiatives that have been rolled out to support innovation in the economy. Now, I understand, I want to make this disclaimer, Rabeel is not a government representative, but you are a subject matter expert, Rabeel. And so I'll ask you, would you be able to share with us steps the government has taken to support this innovation in the economy? And then perhaps some color on the Digital Pakistan initiative, I think would be interesting for the viewers as well.
Sure. I think there is intent from the government side to facilitate the sector. And when we talk about the sector, there is a little bit of confusion within the decision maker circles, if I may put it that way, as to what makes up this IT sector. Because traditionally, IT in Pakistan has been described as outsourced services being offered out of Pakistan because there's a cost arbitrage opportunity. What we refer to as the venture ecosystem actually speaks to a different kind of offering, which is product offerings for Pakistan that are consumed by Pakistanis and with the products being built by Pakistanis as well. So various different initiatives have been taken over the last few years to both help train the workforce for adoption into the sector, and also certain facilitation of new startups being set up, etc. And now we're also experiencing some relaxation, or I should say, some tweaking of regulation to make it easier for also funds to be set up within the country and for capital to flow into the country, into this sector. But to name some of the specific initiatives, a few years ago, the government Ministry of IT, together with the Ignite, started this National Incubation Center drive, where they set up national incubation centers in different major cities of the country. Those incubators were responsible for, again, taking different cohorts of companies through them, getting them up to speed on the basics of, again, company building, hiring, putting them in front of people who had done it before, etc. So that was, again, some of the longer term kind of software improvement that was intended through these NICs. Now I believe they're in their fourth or fifth year. Most of them have graduated north of 80, 100 companies each. So there is a little bit of this network of incubators that has been set up, which is an encouraging sign to any individual that might be coming out of university and wanting to go straight into entrepreneurship versus taking a job and getting experience first. So those have been one, let's call them, stream of initiatives. Another stream has been just training, which is they had a digi skills program, which again has this, I believe if I get my numbers right, the intention of training up to 1 million people in Pakistan on basic digital literacy, so that they could even take up roles on these freelance platforms like Fiverr, etc. So that has been again encouraging. Then there has been very recently also, for example, um, moves by the state bank to make it easier for companies that are emerging in Pakistan or startups to be able to interact and pay and use services of international providers such as Google, Facebook, etc. Because a lot of the spend that they're doing to acquire customers is through these platforms. And previously, there wasn't even avenue to make those payments, and individuals had to rely on using their own personal credit cards, etc. So all of this is again in a similar vein, things that are moving in the right direction under various different government initiatives. That is just making it easier to do business, number one, and B, in some cases, specifically helping out startups. So what are some of the specific amendments that have gone through which have helped startups? There's a tax break, which is available. The SECP has had various improvements so that new company incorporation and the paperwork around that is much reduced compared to earlier. It takes a lot less time. There's also a lot of this e-governance facilitation, which is again trying to remove hurdles and roadblocks from everyday everyday ease of doing business. However, I should caveat all of this by saying that there is a lot that has to be done, and in some cases there have also been some disappointments, and this is where I would perhaps bring up the Digital Pakistan initiative. I believe the intent of it at the beginning, the people that were engaged in it, including Tanya and Khurram and all, were again very capable, talented people who came back, became Pakistanis to help the country. But I feel like the about turn that the government took was not a helpful step in that. And again, I feel it's my responsibility to raise this voice because people, when they come back to Pakistan wanting to do good, it's aspects like these, it's instances like these which take that kind of like motivation away and discourage legions of other diaspora Pakistanis from coming back. But coming back to the original topic of what was Digital Pakistan, it was really the key pillars on which a digital economy could be based, and how we could transition from our current economic makeup to one where entrepreneurship is encouraged, where the youth are not coming out of colleges looking for jobs, but actually can be a source of providing jobs to others by setting up their own ventures, by leveraging technology, which is a tremendous enabler of scale, and by utilizing incentives that the government puts in place, such as making cheap internet available, setting up technology zones, giving incentives for investments in that sector, and also then, in some cases, even providing capital to startups, either on a matching basis or through funds, so that they can achieve growth and scale. So there have been various different initiatives, and I think there continues to be a decent intent, but there's a lot more that can be done as well.
Wow, excellent. Thank you for some fantastic information there. Listen, for a layman sitting outside, all the initiatives that you mentioned seem like there's a lot happening in this front in the Pakistan economy. But you being on the inside, I think you summarized it at the end. This is fantastic, but there's clearly a lot that still remains that needs to be accomplished. So again, thank you for sharing those perspectives with us. We've focused on innovation in our conversation so far. This is an investing show, and I'll try to merge the two topics in my next question. And I'll ask you, in your mind, Rabeel, what are the major innovation themes that will shape Pakistan's economy moving forward? And I'll try to make it slightly more difficult for you, and I'll drill down and be a bit more specific and ask what companies and sectors do you believe have successfully pivoted their business models in this new digital era? And at the same time, what are those incumbents on the other side that are challenged by this new reality and are maybe ripe for disruption?
Excellent question, and not one easy to answer because what we argue day in, day out is of all the sectors that are present in Pakistan or that are propping up in Pakistan, we believe technology has the room to make the biggest difference. And when we describe technology, it's not just like technology products themselves, it's also tech-enabled industries. Now, in a simple example, prior to COVID, there was a very small fraction of the population that was even ordering groceries online. And now these groceries are mostly coming from the same mandis or same going to the same warehouses, etc. And you can choose to either buy them at an al-Fatah or have them delivered to your home. When COVID struck, people didn't have a choice and started ordering. And now they realize that, wow, this is actually very convenient. So a lot of those businesses that were previously ignoring this whole digitization wave are now fast tracking their own online presence, right? So we're seeing some of that brick and mortar become a blended offering, which is of course also accompanied by some online only offerings coming up as well, right? So we're seeing this kind of like, emergence of more and more businesses that might have been present there and might be trying to do some sort of a hybrid because they believe that the young population is online. And the data backs that up. 68 odd % of our population is less than 30 years old. And really the ones that are below 30 years old haven't started consuming yet, at least in terms of like, material consumption decisions. And if their first avenue is mobile or is online, then anyone that isn't present there isn't getting potentially a bite of that pie effectively. And so we're seeing that transition just increase month on month as more and more kind of like, penetration is coming up. Now, what are the businesses that are potentially getting threatened? Now, I gave the example earlier of B2B digitization, retail digitization. If the in-between guys, like the distributors, don't change their behaviors from dumping all of that, whatever materials they're picking up from manufacturers in these wholesale markets, then their business is at risk. Because that portion of the pie is being caught by another player. And now if they evolve their model so that they can work together with some of these startups, maybe there is a portion that they can also have. In a similar way, traditional real estate sector, for example. What I found very interesting when I started doing VC in Pakistan and still find very fascinating is we are currently obsessed with real estate. Every person who has like a little bit of money feels that he's also a real estate investor, he can make these decisions, etc. However, the most valuable real estate company in Pakistan is Zameen, or a real estate tech company, which doesn't own real estate. And the reason why they've been able to capture a big chunk of that value in between is because they didn't come into the market and completely disrupt the real estate agents out of the market. What they did was they instead brought them on board and said, why don't you become members? Because the inventory was in their hands. So this was now a traditional sector, which was being done how like developers have built these over the years and sold these over the years. Star Marketing used to run these television ads when we were young. They still run them. But in comes this tech-enabled player, which is doing digital only. And because of aggregating all the traffic, they had better data on what profile of buyer would buy what sort of property in which area with what specs. And that then effectively continued to build on their advantage, where they could then go to a developer and say, we can sell your property before anyone else because we have this information and this data, etc. So they solve for the supply side by partnering up with these real estate agents rather than disrupting them. And they went to the supply, like again, to the actual original source of supply of the developers and said, well, there's a value that you can derive from there. And through that, they were able to capture enough market share that they now have, like, with this combination with OLX now being worth over $1 billion. Interesting bit in this is if you still go to any real estate developer in Pakistan, they will say, what's so special about Zameen? They will comment about how not impressive their website is. They will comment about all these things that can be improved, and they certainly can be improved. But the whole idea is they don't even understand where they are being disrupted, and that disruption has happened over the last decade, and a lot of that value has been captured by this company, and they're only growing from strength to strength. So these might be, again, slightly kind of nuanced examples of like traditional sectors. Maybe one direct example is a bank, like I quoted earlier. It takes me right now 5 minutes and an annoying sequence of inputs to even add a new payee to my online banking account. I need to put in a one-time password. I need to put in an email PIN, which is sent separately. First it gets added, then I need to go select that person again, insert amount. This should be much simpler. Everywhere else in the world, it's much simpler. Another example is payments that come from abroad. You want to get paid by PayPal, etc. It's still not feasible in Pakistan. If your family relative is working in UAE, he wants to send remittance back, he still has to lose a big chunk of that value in just sending it back. Now, these are all supposedly countries or places which are covered very well by banking, but the systems don't speak to each other. Digital payments aren't really common. So anyone that comes up with a digital bank offering, digital lending offering, digital payments, again, all of these will actually disrupt some of the more traditional banks, up until the point that people also feel more comfortable putting their money into these digital banks as well. As an example, we, as a fund, we use a digital bank. We don't see the requirement to have a brick and mortar facility to go into if it's not going to be addressing the needs that we have. So I think this is still very early. If I may use at an overall level, a baseball terminology, we're really beginning of second innings in Pakistan in these sectors. So a lot has to be played, but we also don't see these incumbents moving quickly enough. So I think it will be interesting in come 2-3 years when more adoption takes place on the digital side, and if the traditional banks continue to act the same way, I think there will be disruption.
I love those examples, Rabeel. One of the things here is how can we inform investors to make better decisions so they can get some clarity about the direction the economy is going and perhaps ride some of those tailwinds. And these stories and examples they're exactly the type of stuff we want to eat up and make the most of. So thank you for laying that out. I'll shift very quickly to my next question, and that is, if you think about the average equity investor in Pakistan and think about the options they have available to them, they're quite limited. In fact, I think the only platform that comes to mind is the Pakistan Stock Exchange for most average retail investors. And then if you look at the Pakistan Stock Exchange and the companies listed there, this is a general observation. I'm sure there will be exceptions to this rule, but they're typically your more mature, stable companies that hail from traditional industries. And so these equity investors end up missing out on those innovation-first growth stories that you have alluded to in our conversation today. And so I'll ask you, in your mind, what needs to take place for high-growth, tech-oriented startups to consider the Pakistan Stock Exchange as a platform to raise capital?
Very good question again. And there have been attempts at this, but nothing really has come out of them yet. I think there are two aspects. One is the structural challenge. The structural challenge is that even when you look at the listing requirements on the main exchange of the BSX, they'll require 3 years of profitability. They'll require X years of operations and a very traditional kind of like makeup of each company that they expect to list on. And those are again structural issues that have been attempted to be solved through a small companies exchange instead, so that smaller listings could take place. But I don't think that really solves the issue, because you might be better aware of the liquidity on the Pakistan Stock Exchange compared to me, but it's not that much. And so the problem isn't solved by actually going smaller and creating avenues for even smaller raises, but it's really how do you bring that liquidity to the market. So one is a structural consideration. The second aspect is more investor behavior, and I think investor comfort. The reality is, when we started 2 years ago, venture capital was an alien term as well. Now people are picking up on buzzwords because they see these higher valuations of these companies, the raises they're doing, and of course globally you hear more about the Elon Musk and the Mark Zuckerbergs compared to some of those traditional business founders or owners. And so this is something which even the investment houses in the country are just more comfortable being able to value a business based on earnings metrics, based on more established valuation benchmarks compared to what tech valuations tend to be, which again is seen as a little bit of a separate case compared to traditional businesses, or again how investors have approached value investing, for example, because there is no right or wrong kind of assumption at a very early stage. And the challenge is that at what stage would a Pakistani startup be generating the kind of profits or have the profile that would satisfy the local investor base, which would be signing up or subscribing to these types of IPOs. And our view on that one, unfortunately, is that it will be probably beyond the time frame, at least that we have of our fund. And the reason for that is I think there's likelihood of some of the Pakistani startups that we're working with potentially expanding outside. And if they are able to expand outside, and for example, a company that straddles Pakistan and Saudi Arabia is going to actually, based on current status, prefer to list on the Tadawul exchange in Saudi. Reason being, again, bigger investors, more liquidity, etc., which allows you to then tap into a bigger investor base as well. However, all that said, one of our key objectives is of doing Sarmayacar is so that we start to see tech businesses get listed in Pakistan. And whenever there is an avenue, and if we do have a business that fits a certain profile that could be listed, we will, of course, be trying for it. I just think right now it's a little early, both from a structural and also liquidity perspective.
Excellent. Listen, what a riveting conversation. Rabeel, you've provided such fresh perspectives to us that myself as well as viewers could use to, as I mentioned, become more informed and confident investors moving forward. In fact, for someone like myself who does not have a tech background, just hearing you speak about the things that are happening in Pakistan on this front makes me excited about the possibilities that exist in this economy. So thank you for laying it out in such, there was just sort of natural excitement as you were explaining these concepts to us. So thank you for that.
Thank you.
So as I conclude this conversation, I'll just ask you, I'm sure myself and we would have viewers as well, who would, one, like to learn more about the innovation that's happening in Pakistan. So my first piece would be, how can they follow your work and Sarmayacar's work? The second piece would be, we would have investors who might be interested in participating in this growth and innovation story that's happening in Pakistan. So how can they participate in venture capital funds like Sarmayacar? And then no investment comes without risk. So if you'd be kind enough as well for those individuals, perhaps one or two lines in your mind in terms of risks that they would need to be mindful of.
Absolutely. The easy first question is easy. We have a digital presence. We will hopefully also be rolling out a new website in a couple of weeks, but either through web, through Twitter, LinkedIn, Facebook, we have our presence on there. My own email address is rabeel@sarmayacar.com. So if anyone wants to contact me directly, very happy to respond there. In response to your question around possible participation, so our fund is actually still open for kind of like last commitments. We are intending to have the final close towards the end of the year, and currently are seeing quite a bit of interest as well following, well, I shouldn't say following COVID, but now that people are coming back, there has been this renewed interest in taking exposure to the space in Pakistan. So I think the avenue, the key first decision is really whether to go direct or to go via a fund. Going direct means that one would have to build their own portfolio, because in venture capital, it only makes sense if you have a portfolio of such bets rather than just one. If you go via a fund, the fund is meant to do all of that. So the idea is that whether one feels that they can give the time, set up the infrastructure, and build up that portfolio and also generate deal flow, or go via a fund, which would, of course, at the beginning, have this fee element to it, but all in all would achieve the kind of purposes that we're trying to achieve. So if they go via a fund, they're effectively outsourcing their venture capital exposure to Pakistan through that. Now, coming back to your last point, which was what are the kind of risks that are associated with it? So whenever you bring up the prospect of investing in Pakistan, the first people who get worried are Pakistanis themselves, right? And it was the same for myself. And when I mentioned at the beginning, this could only be done on the ground, it was largely driven by this kind of belief that who else is going to look after your capital better than yourself, and I think that really extends in to kind of the setup and the structure that is being used, to the currency of investment, to the governance that is set up, to kind of what kind of checks and balances or controls might be in place, and all of that. I think every fund is taking their own view. Our view around this was that we believe that the Pakistani regime was not sophisticated enough for us to set up the fund in Pakistan. So we have domiciled it actually in the Netherlands, which we believe is a more secure jurisdiction for investors as well. So it mitigates some of the jurisdictional risk that comes with parking all of your money in Pakistan. Then the next consideration is ours is a GP LP fund, as would be expected of any blue chip setup in the world. But one other key consideration is it's a US dollar fund. So investment is made in US dollars and returns are made in US dollars. The thing that we mitigate, the risk we mitigate for investors is our profit sharing or carry doesn't kick in until the same USDs are returned to the investors. So that FX risk is in a way mitigated, at least in the sense of us not being incentivized to sell at high PKR valuations, but not really high enough USD valuation. Otherwise, the standard risk again would be whether there's enough talent in the country. We believe there is a lot of resource which requires grooming, but in terms of availability of talent, probably one of the best places in the world in terms of the cost of that versus the talent that is available. In terms of any a state level kind of risk or appropriation risk is somewhat mitigated because each of our investment comes in separately into a company and gets registered with the state bank. So there's a few different checks and balances that are typically put in place. And then of course we have, in some cases you would have institutional investors as well behind you. So we have the IFC, which is part of the World Bank Group. And so anyone, we say, anyone that has been vetted by them clearly can't have anything which is non-standard in documentation, in the governance setup, in how the structure is set up. So that's really again the avenues that we use to provide comfort to investors. I do want to share one final thing though is ultimately what we are doing in Pakistan is we are introducing the notion of investing in people. Um, Before us, or before venture capital was introduced, or the venture ecosystem took off, people would invest in buildings and plots, in companies, but not people. And what our investors have also done is they've invested in people. They've invested in us, in being able to pick the right companies, etc. So there is this ultimate comfort that an investor has to draw on the people who are running Sarmayacar, on the decisions that are being made there. And to mitigate, like not to mitigate, but to convince investors that there is alignment, I put in my own money first. I moved back before I raised this external fund. We don't draw down on capital the moment it's committed. We only draw it down tied to investments. And the overseeing us is also an internationally experienced board that ensures that we do everything for the book and try to build this. Because the view was, this is not one fund story. I didn't move back to try to make these 7 investments and hit a 6 and retire. I came back because I want to build Sarmayacar, and I wanted to outlive me, and for us to be playing a key role in building the venture ecosystem in the country, and that is not a short-term thing. So every action and every structural setup that we did was with a view to being here in 20 years plus, inshallah.